So we'll just jump right in. I'm curious, moving forward, what sort of trends and things you see that will impact interest rates and the real estate market in 2025?
Yeah, good question. So, as we speak right now, the national average rates is about 6.9.
Okay.
So I think, we take a step backwards before we look forward. I would say about 60 days ago, the rates almost cracked 6%.
Okay.
5.9, 6%, about 60 days ago. And then here comes the Fed, right? And 30 days later, they lowered the interest rates, okay, which everybody was getting excited about.
Right.
And the day after they lowered the rates, we had about a 30-day period where rates went back up to about 7.25. We've kind of come down to 6.9ish now. So, I think when you talk about mortgage rates, in the Fed lowering the rates, it's not a correlation between the two. So the Fed lowering the rates is on short-term money,
right,
such as home equity lines, personal loans, credit cards.
Okay.
Whereas the mortgage rates, kind of think of it as like a stock, right? They move up and down daily.
Right.
So it's more about perception of what's going to happen with mortgage rates.
Okay.
Not necessarily when they do it.
So, like when they come out and speak and have some of these changes, a lot of it is being priced in right then.
Correct.
Like on the expectation of future.
Correct.
Okay.
Yeah.
So they're reacting.
Yeah. So a lot of people don't understand that concept. They think when the Fed lowers the rate, the mortgage rate automatically comes down. And that's all kind of been baked in on perception. So I think what's happened here recently is the Fed's scheduled to meet in December, and the expectation was another quarter point decrease, but now they're kind of backing off of that.
Okay.
So the market's reacting, daily to that perception of what's going to happen, and then we've kind of increased a little bit.
Well, and so Gainesville and a lot of markets are really seasonal. Is it hard to tell like where loan applications are right now? Like, have you seen things drop off, or is this normal seasonal, or is this now people reacting to rates bumping back up a little?
Yeah, again, historically, you've been in the business
Right.
as long as I have, and we've always seen, September, October, maybe even August are slower months in general.
Right.
And then the busy season starts to turn around February, March, goes all the way through July. So I think, yeah, it's probably a little bit down.
Okay.
But yeah, we'll see. I think, we're supposed to hear, and there's inflation reports that come out. There's the CPI and the PC. I won't bore you with all the,
Right.
the details of that, but the bottom line is there's reports coming out. Those come out once a month, and starting in January through February, March, the year-over-year numbers are supposed to come significantly down.
Okay.
So when you ask the question about what do we forecast next year, I think those inflation reports are going to help us.
Okay.
And, a lot of the experts predict that, the new normal rate may be in that 6% range. So kind of what we're thinking is, we're upper sixes. Maybe we kind of get back to where we were a couple months ago.
Okay.
And kind of hold there at that, maybe that upper 5s to 6, low 6s. So,
And that I was looking, I think it was Fannie Mae just earlier this month had put out their projections, I think going out a year or two, and the average was falling maybe 6.25,
right.
Mid-low 6s. So it sounds like that's where a lot of people expect it to be. Curious if there's been any recent changes or proposals or anything happening related to loan limits or anything that would impact buyers if they're looking to move in 2025?
Yeah. So, each conventional FHA, those are two of the biggest loan programs that lenders use.
Right.
And each one of those have loan limits. In other words, you can't exceed that dollar amount or it kicks you out of the program.
Right.
So the the conventional loan amount currently is at 766 and some change, 766,000.
Right. Okay.
And it's going to go up. It's about a 5% increase starting January 1 to about 802.
Okay.
Okay, so that's a win. FHA, although I don't believe it's been officially released, it's currently around 498, and it's going to 528, and about another 5 or 6% increase.
Interesting.
So as you start to think about next year, those loan limits, 5 or 6% increase can't hurt.
Right. Well, I'm curious because I've seen some other projections about appreciation, and all of the major analysts and experts out there are expecting anywhere from 0.25% to 4% appreciation. Would you say those limits increasing are also kind of an indicator that prices are expected to stay the same or go up?
I do.
Right.
Yeah. If you go back 20 plus years ago when I first started, the conventional conforming loan amount was 417.
Right.
And the FHA was, 280, 270,
Wow.
something like that. And it stayed that way for, it seemed like 10 years.
Right.
And I could never figure that out. And then, fast forward to today, the last 5 or 6 years, every year we've kind of seen a 3, 4, 5% increase. So I think that's really interesting of how it stayed so flat for so long. And
Right.
then, all of a sudden every year we're getting that little increase.
Well, it would make sense that it correlates with prices, appreciation, inflation, whatever it may be, because they still want to provide a product that can suit as many people as possible. And so if they were staying at those limits of 4 something and 2 something,
I wouldn't have a job.
Right. No one would be using them.
That's right.
So it's interesting. So I guess between that and some of those other experts out there, have you seen anything else that would indicate prices to continue to move up? Or
Yeah, I think, the rates will be a big factor in
Right.
that. Obviously, if we get a little reduction next year, I think that would spur, more of a buyer's market. I was reading something yesterday. I think we all kind of know this, but 1,000 or so people moving to Florida every day.
Right.
Well, I mean,
Yep.
they've got to buy something or rent.
Right.
So I would think all of those factors will continue to see, not appreciation like we saw in the COVID years, but
Right. But not a decrease.
but yeah, I expect there to be small appreciation, and that's kind of what the experts feel as well.
Right. Well, in that same line of thinking, buyers coming into the market, what would you say some of the biggest challenges for buyers who are looking to buy a home? What sort of challenges do they run into?
Again, I think home affordability
Right.
is still challenging right now. We were prior to COVID, we were in that 5 or 6%, range on rates, and then COVID happened, and next thing you know, rates are 2 or 3%, and kind of goes back to what we were just talking about, appreciation, right?
Right.
Well, when the rates went down to 2 or 3%, it went nuts.
Right.
People bought
Yep.
everything,
Yep.
and COVID was a whole nother thing. But I'd say the other piece of that would probably be, condition of property.
Okay.
That would probably be a challenge as well, because, let's face it, not every home is turnkey.
Right.
I mean, you get into these homes and repairs are needed. Insurance has become more difficult
Right.
as well to get insurance without doing certain repairs. So even if you land the house and you're under contract, you're not done yet.
Right. Yeah.
And you've seen it probably 1 out of 3
Yeah.
people sometimes will cancel
Right.
because of repairs.
What they're finding on the inspection. And I think that's the same thing I've seen on affordability. It's post-COVID, it's been the perfect storm of appreciation, home prices still going up, interest rates moving back up from where they were COVID levels, and then mix in Florida's insurance, and whether it's an older roof or a hot water heater or whatever it may be, just insurance, property taxes, everything across the board has continued to increase and made it really challenging on buyers. And then that's what is kind of kept prices relatively level is there's not a ton of inventory because
Inventory.
people are kind of stuck
Correct.
with that lower rate. They'd have to
Correct.
move up in price and rate and everything.
Right.
So not as many homes are coming on the market. I'm curious to see if we can see a little bit of a dip in interest rates because I bet a lot of people have some sort of benchmark. If the interest rate drops below 6.5, we're going to move. You know, that's because no one expects it to get back to 3.
Right.
But
if you can get past the hurdles of getting the home, and you know, I was reading something, they said 2024, the average net wealth of a homeowner was $400,000.
Okay.
Average net wealth of a renter was $10,000.
Right.
So there's definitely value of getting over that hump if you can get there, because it's proven to provide wealth over time.
Well, it's one of the old sayings, don't wait to buy and wait. And that's, I mean, since I've got into real estate maybe 13-ish years ago, every single year I've had a certain number of customers say, oh, we're going to wait until prices come down. And in my 13 years, I haven't seen that.
Right.
I mean, in the last couple of years, we've seen slight, I don't even know if it's a decrease. It's just sellers willing to move a little bit and negotiate more. But overall, we haven't seen any sort of decrease in price. So if over that 13 years, if you would have bought at any time, you'd be in pretty good shape right now.
That's right.
Curious to see what that would look like going forward. Any specific advice or any insight you'd have for a buyer who's looking to get a mortgage and buy a home next year?
It's critical, especially for first-time home buyers, I think, to have a conversation much earlier in the process of buying. You know, if that conversation can be done 6 or 12 months in advance of the anticipation date, so highly recommended. I would tell that person to rate themselves. As a buyer, and say, well, what do you mean by rate themselves? Well, you know, there's 3 factors that go into getting a loan. One is your credit. Is it good? Is it bad? Is there no credit? Income. You know, how is my income generated? Am I self-employed? Do I have a salary job? You know, is it 1099? Where does my income? I'm a retiree. You know, where does that stand? And then third is assets. Do I have $100,000 in the bank? Do I have $2,000 in the bank? Somewhere in between. Right. So think through that and rate yourself on those categories, and you'll find out, you know, a lot of people may have, you know, great credit, no debt, and, you know, a good steady job, but they're lacking in the savings area. So on the reverse side, you know, maybe they have a bunch of money in the bank for down payment, but their problem is credit. And so, how do we work through that to build the credit score up? Because we got the down payment, we got the job, but those are 2 of the 3. So talking with a lender, you don't have to, you can rate yourself, but you can get help from a lender to rate you as well. But I would say, think through those 3 things, and where's my weakness and how do I improve on my weakness?
And is there any, you know, you said 6 to 12 months out, is there any downside to reaching out? I know some people, when they come to me and they haven't talked to a lender, they're concerned about a credit pull or any sort of is there any negative side to reaching out to a lender and having that conversation?
No. And, you know, you just want to be careful. I do know there's a lot of great loan officers in our business, but some may be very quick to want to pull take the application and pull the credit, right? My thing is, what's wrong with just having a conversation about, because if you're 12 months down the line, I mean, pulling a credit today is going to expire anyway. So let's not hit it with a pull. Let's just talk through the scenario. There's so many different ways to get your credit scores, although they may not be exactly with what lenders pull, but you can get a good idea of a starting point of, hey, here's where I'm at. And again, talk through those 3 pieces and just talk. Just talk. That's it. Don't fill out the app. Don't pull credit. Let's just talk.
That's a good starting point, and it's also with the caveat that the consumer is ready to be open, honest, and is aware. I mean, a lot of people that I've run into,
Mhm.
they probably don't have a good idea exactly where their credit falls. So they think they've made all their payments and it should be in good shape. And
Right.
then, in the back of their head, they forgot about, you
This,
know,
that, or the other.
yeah, a couple of late
Sure.
payments or something that may be sitting out
Sure.
there.
Sure.
Then fast forward to a buyer who's ready to submit an offer.
Mm.
Um, Being on the financing side, you're hearing when someone's won an offer and moving forward. Any strategies or anything that you're seeing buyers do in the market that put them further ahead to get that winning offer?
Yeah, so you could probably speak a little
Yeah.
bit to this too, but I would say, sort of the standard is the pre-approval letter,
Mhm.
right? You always want to start with that.
Right.
But to take that a step further, there's a loan commitment. Okay, so what's the difference between a pre-approval and a loan commitment? Well, pre-approval is kind of going back to that what we just talked about, conversation, just having a conversation. Okay,
Okay.
here's your credit, here's your income, here's your asset. Okay, everything looks good. You're going to be qualified. But the loan commitment is the actual underwriter within the lender's company reviewing income, assets, and credit, and they have stamped the approval
Right.
and said you're good to go. That's a much different situation than call it a pre-approval certificate. So as you go in with your offer and you have a loan commitment attached to a pre-approval, I would think that would give the listing agent and the seller a peace of mind. Well, this file's already been through underwriting.
Right. Yeah.
So, obviously, cash is king. I
Right.
mean, how long has that phrase been
Yeah.
around?
Yeah.
I would also say, if you have cash to pay for a home, as a lender, we can come back and do something called delayed financing, which
Mm.
means, hey, I've used all my money to buy this $200,000 home, but I didn't really want to use my money.
Mm.
So we can, once you've purchased it, we can come back and do a refinance, the day after closing
Mm.
and reimburse them for a percent
Okay.
of that loan. So, again, it's just a temporary,
Right.
if they're taking that money out of the stock market, IRA, whatever, we can maybe put that back in and not have a
Okay.
tax consequence.
Well, and that, especially in a hyper competitive market, could really be beneficial.
Yeah.
Because again, cash offers are typically first on the list to
Yeah.
get picked. So if a consumer knew they could cash back out that quickly
Right.
after closing and
Right.
still get the house they want, make a big difference.
And then
Um,
maybe, on your side, if they were to get a little carried away, but paying, some of the seller's expenses.
right.
I think we've seen that,
Yep.
maybe not very recently, but over spring, the last
Right.
spring or the spring before.
Yeah.
That would be sort of a nice feather in the cap as the buyer paying
Oh,
a
yeah.
seller cost.
Yeah. Well, and I mean, I would expect if we do see interest rates on the decline, especially enough to really move the needle, that will bring a lot more buyers
right.
back and we'll see competition again. It won't be to the extent of sort of pandemic, but it would be multiple offers and you want to do some of these things to separate yourself from the other offers. So that makes
That's right.
sense. There's a lot of information out there. What sort of misconceptions do you see come up when it comes to financing and buying a home and actually getting a mortgage?
How much time do we have? Right.
All day.
Yeah. Boy, there's a lot of those out there. I think of one that most people don't probably think about, but I get the question a lot is, hey, if I put, all this extra money down, it's going to lower my payment so significantly. And the answer is it typically doesn't, right? So that's a true statement. Obviously, the more you put down, the lower your payment's going to be. But one piece of advice that I give to people, and they're so appreciative, and it's such an easy piece of advice, is so for every $10,000 that you put down, it's about $60 a month on your payment.
Okay.
So, I get the question without even saying that. Okay, what if I mark my payments a little higher than I want? What if I got 30 extra thousand, Well, it's $180,
Right. Okay.
So yes, it's $180, but for $30,000,
Right.
that's, I can argue that's not a lot of savings.
Right.
Maybe keep that money and I'm trying to sell a higher loan.
Yeah.
But the misconception is, hey, I put $30,000, my payment's going to drop $700 a month.
Right.
And
Okay.
that's just, that's not the case.
So there's a sort of a point where it's diminishing returns, probably.
Right.
Right.
And now on the reverse side is, what's your pain tolerance for losing an offer?
Mm-hmm.
Okay. And so we just said $60 for every 10,000, right? Well, if I'm at, if I'm offering at ask price and I go 10,000 over,
Mm-hmm.
well, it's only $60.
Right.
So how much pain is this going to cost me if I don't get this house? Whereas I could have won it from the competition if I offered 10,000 over.
Right.
So there's a reverse thinking there as well.
Yeah. Well, it's interesting to hear sort of those direct numbers and $60 for 10,000 and know that direct impact. Because that for a lot of buyers would move the needle and make them a little more comfortable.
Right.
Especially if they're in a spot where they love the house. This is the one, and you've been looking for 4 months.
Right.
$60 a month is probably going to be worth it for a lot of people.
And, the other one I would say is the closing cost, right? So when people come to me, they say, I have $20,000 to put down, and, they've done the math and said, okay, that's 5% of the price. So woohoo, I'm set, right? I've got my 20 grand, that's 5%, I'm done, right?
Right.
And then I tell them, well, yeah, that's great, but we do have, $10,000 of closing costs. And so nobody, almost, unless you're an experienced home buyer, a lot of those first time, they just don't understand.
Factor that in.
They don't factor that in. And then it becomes a thing, right? And then we have to start talking about, okay, is there less down payment programs available? Is there a way to maybe structure the contract to where the seller can, pay for some of the buyer's closing costs? So that's a big one that we see.
Well, and that would go back to your original advice of having the conversation with the lender early, who can look at your assets and say, but depending on the home price you're looking at, you've got down payment money, but you don't have your closing cost money. And that's the area you have to build up.
Right.
Knowing that sooner than later makes a big difference.
And one last one is thought of as, oftentimes people, I'll ask the question, what do you have available for down payment? And then maybe the answer is, $10,000. And so as a loan officer, there needs to be a second question to that is, okay, how long has that money been in your account? Okay,
right.
Because the misconception is as long as I have the money by, the day or two before closing, I'm golden.
Right.
Well, as a loan officer, if you don't ask that follow-up question, just because the money is going to be there or has been recently put in your bank account, those monies may not be acceptable monies.
Right. Okay.
So we need to really pay attention to, where's that money? How long has the money been in the account? Right. If not, where is it coming from?
Yep. I've had that with multiple buyers, and we've seen it a lot more as prices go up, where there are people getting gift funds and then letters of explanation needed. So the underwriter knows it's not going to be paid back and not another loan. Right. And in a lot of those situations, my understanding, it needs to be seasoned.
Right.
And so having it in the account.
And typically that period is a couple months is what the underwriters are looking for. A couple bank statements to show that, they don't see large deposits in their bank account. So yeah, that one blows a lot of people's mind because they have the money. Right. Why can't I use it?
Yeah. Yep. No, I can see that being confusing, especially again, if you've never bought a home or you only bought one,
we wouldn't know that.
A long time ago. So you've been in town. I've had a lot of customers that work with you on the financing side and been really happy with everything. Curious, as people are reaching out, talking to lenders, what would be some red flags or anything that would maybe cause a little bit of hesitation as a consumer talking to a lender? Is there anything they should be on the lookout for, or anything that would, you know, maybe make them consider having more than one conversation with other lenders?
Well, look, I mean, I think it's always a good idea to get different opinions.
Right.
We're not always 100%, perfect.
Right. Yeah.
So, looking at, rates, a big topic, the fees are a big topic. So, you know, um, look, educating yourself on, trying to find, a good deal. I mean, look, rate's not everything.
Right.
Okay. Fees aren't everything. They're important. But, if you're not comfortable working with that person and maybe the accessibility's there or not there,
Right.
it can become a very frustrating process for a buyer if they don't feel that attention. So you
That's
have to
usually,
mix
yeah,
both of those.
the combination. You need the numbers to work, but then you also need to be able to call, text, email, and have the communication. One other thing that I talk to customers about all the time is making sure they can set sort of side by side the numbers, because a lot of times you've got a rate that looks great, and then when you look at the details, you're paying to buy that rate down, so your fees are a little bit higher, and they're not really comparing apples to apples. So getting two estimates, laying them side by side so you can see which one is actually better versus some sort of introductory rate that just looks appealing. You don't realize you're paying $4,000 for it on the back end.
Right. So if I'm saving, $15 on my payment, but I'm bringing $4,000 to closing, well, that math doesn't really add up too great to me.
Yeah. So having those conversations early and talking to a few different people makes sense. Curious, without getting into anything political, recent election, a lot of projections around what that means for the economy and buyers and sellers and everything else. But is there anything that you're seeing or anything that you're reading that shows positive, negative, Trump's impact on, the home buying and the market and prices and rates in general?
Right. Well, ironically, I mean, I don't know how many days it's been since the election. What are we, 30, 40 days in or so? We're about status quo on the rates. So there hasn't been maybe a touch improvement.
Okay.
But it's been pretty steady since the day of the election. I'm sure there's everybody's going to have a different opinion on that. But I do think, Trump having the financial background, I think maybe there's a acknowledgement that, the more people have in the bank, the better they're going to feel about, purchasing things, not just home ownership, but just anything, right? Yeah. So as they feel perhaps maybe that the stock market, I do think we're, since the election, we're 5 or 6% up in the market, stock market. So if people have a confidence level that their monies are going to remain steady and go up, I think it's human nature to think that they'll spend more money and take, more risks.
Right. Well, I mean, during uncertain times, you're going to tighten up. Right. And, budget a lot closely.
Right. But the biggest thing is certainty, right? I mean, that's really what it boils down to, is now we just have some certainty of some uncertainty, of course, but you see what I'm saying, between who's elected. So, the certainty is now there. So there's, that period of when we were back in August, September, we were working, it was so much uncertainty, right? So now we're kind of past that.
Well, and that's what I've seen. And even talking to people, no matter what side you fall on, everyone was just in a wait and see mode. And whether their person won or lost, they're still ready to move forward, versus 3 months ago, it was a very, no, we have to wait. And now, again, both sides, I've been helping people, like, they just overall they may not like the outcome or they may love it, but they're ready to move forward either way because that decision's made. We're moving forward and life
Correct.
goes on.
Correct.
So it's always interesting, those election cycles where you just have this waiting game of like 4 to 6 months where no
Yes.
one wants to do anything, where that's probably the ideal time to go ahead and do something.
That's right. That's a good point.
So it'll be interesting to see. So we've talked about a few different things and how to prepare and what buyers can be doing. I'm curious, out of all your experience, what are some of the biggest mistakes you've seen buyers make financially that could have been avoided?
Right. Definitely. Great question. Obviously avoid buying that Mercedes, right before closing, because a $600 or $700 payment can definitely interfere
Right.
with an approval for a mortgage. Co-signing,
Oh, okay.
so people think oftentimes, oh, I co-sign, it's not my debt because my son's paying for it. He just had to, help. I just had to help him out, but he's making the payments.
Yeah.
Well, especially if that account is new, typically 12 months or newer, it doesn't matter who's making the payments. You've signed on it. It's your obligation. Okay.
Right.
So, try to stay away from co-signing. Do all you want after you buy a house, but
Right.
let's not co-sign, prior to it, especially the previous 12 months. Mattress money. Um,
Yeah.
what is mattress
Yeah.
money? Well, I don't trust the bank, so I'm gonna throw all my $20,000 in my seat cushion couch. That's a terrible idea for a lot of reasons. Okay.
Right.
I've banked. I've been banking and checking for the last 30 something years, and I've never had a problem with my money disappearing
Right.
out of a bank. But I understand it. I get it. But when you go to get a loan, we talked earlier about, seasoning of money, right? Well, you can't just deposit $20,000 in the bank, and that money be acceptable. So, as you're starting to think through the home buying process and getting a mortgage, think 3, 4, 5 months in advance, get that money in the bank.
Right. Okay.
And that way the lender can view a bank statement
Yeah.
and not cash. So
That's
sure.
they reiterate the exact same things I've seen on the sales side. Had one customer, we did the inspection, we're getting ready to close. They pulled up for a walkthrough in a different car that looked very nice to me. And so I asked what was going on. They said, oh yeah, we just bought it. And they said, no, it's okay because the payment is the same as my old payment. But the balance wasn't, and there, lots of issues. So
Right.
that, and then another customer wanted to meet at the house right before the closing to take some measurements. Great, met them. They were measuring out all the flooring,
Right.
and I asked them. They said, "Oh yeah, we're headed to Ocala because we're going to buy all the wood flooring.
Right.
That's going to cost $10,000."
Right.
They were planning on doing it with credit. So again, those are manageable. Those aren't necessarily going to kill a deal, but if the conversation's not had, it definitely could. And it could have been even more preventable
Right.
the sooner the conversation's
Yeah.
had.
Look, it's such an emotional time period. I mean, buying a house, right?
Yep.
And so there's a lot of excitement. And
Right.
why does it always seem like, too, they're buying it around the holidays
Yes.
and the Home Depot is having the Labor Day special?
Of course.
And so I can go get my, my dishwasher and my fridge
yeah.
and, and this is a one-time thing. I'm going to save $1,000. Again, it's a kind of a dangerous proposition. It may not be worth it to, splurge beforehand, splurge after. But again, like you said, have that conversation because it really may not matter. It just may be a little bit more documentation required.
Right.
But you got to have the conversation.
Right.
That's
Yep.
the key.
So then knowing some of the mistakes that happen, what's the best way a buyer can prepare for getting a mortgage and starting that process?
Yeah. So again, speaking to the lender, but when you speak to the lender, you want to be organized.
Okay.
Right. So what do I mean by that? Well, you want to have your pay stubs in front of you. I mean, I can't tell you how many times I ask the question, what is your income? And they don't know the answer to it.
Okay.
And look, I could be in that same boat as well because you just don't, what you get and your bank account when the paycheck hits.
Right.
But, that's a net income. It's, there's deductions taken out. So they don't, you don't know how much you make sometimes. So get your pay stubs in line.
Okay.
If you're self-employed, get your tax returns in line. Usually most people know how much they have in the bank,
Right.
but, the income piece is really the big one. There's
Okay.
different types of pay. You have your salary, you have your variable type pay, you have your 1099 pay, you have your self-employment pay. So again, that's the critical piece. That's such a critical piece of the home buying process. So be ready, have your documents, and that way the lender can even not while you're on the phone call, you could snap a picture, an
Yeah.
email to that person, and the lender can go through it with you then.
Okay.
And now we're not guessing.
Right. Yeah. So knowing the numbers up front so you can provide accurate information and then
That's
go
right.
from there.
Garbage in, garbage out, right?
Right. So I'm curious if you had a friend, family member, someone reaching out, thinking about buying a home in 2025, what would your advice be? Anything looming that you say may hold them back, or is it just all rainbows and
Yeah, look, I mean, if you have the credit, you have the down payment, you're in the position to purchase a house, do it now.
yeah,
Do it now, 100%. Look, the interest rates, may be still a little bit higher than what people want to see, but that's not a lifetime sentence. Okay, you marry the house and you date the rate. I know
yeah,
that phrase been used a while, but it's true. You get the house that you want. You start building the wealth that we talked about
right,
earlier,
yeah.
right? The wealth versus the home ownership and renters, being the $10,000 net worth. But yeah, and then if the rates come down, and they likely will, you refinance into a lower payment, and you have the best of both worlds.
Right.
So no reason to wait on a lower rate or a better house. Find your house, marry the house, date the rate.
Well, it's the exact same thing when you're actually selecting the home to buy because there's certain factors of the home that you can't change. So you want to make sure you absolutely love the location and some of those specific features that can't be changed because some of the other things kind of similar to a rate, you can repaint or you can remodel a kitchen. Some of those things can be changed. So deciding on the specific home and the location is going to be more important as long as you can afford it now compared to the rate in the future.
Absolutely, 100% agree. So again, I think as we look into 2025, it's going to be a great year for not only the buyers, but also the sellers. So yeah, let's go get it.
Yeah, looking forward. Well, thanks so much for
Yeah,
being here.
thanks, Alan.
Appreciate it.
Appreciate it.